Hi, it's me, Sydnia, and I'm back with a long overdue video on compound interest. I know you have been waiting for this video because it needs to be explained simply. I'm the person to do that for you. I'm going to tell you what I know. But first, before I start, let me reiterate, I am not a financial advisor. If I tell you about a product that I'm using, I am not endorsing said product. They didn't pay me to tell you about the product. It's just an example of what I used. So don't try to tell anyone on me because I'm not telling you anything about financial advice. I am not a professional, okay? And I don't even play one on TV. That joke's for free. What is compound interest? It is the addition of interest to the principal sum of your deposit amount, or in other words, interest on interest, or racks on racks. Yeah, I couldn't wait to say that. In an account that pays compound interest, the return is added to the original principal at the end of every compound period, typically daily or monthly. Well, let's go back. What is interest? Interest is money the bank pays into your account over time based on the balance of your account and the interest rate they offer on said account. What is annual percentage yield, or APY? APY is the amount of compound interest an account earns in a year. The calculation is based on the account's interest rate and the number of times interest is paid during the year. A savings account with the highest APY grows faster than an account with a lower yield. Of course. Bigger numbers, bigger percentages, more money, of course, okay? I'm going to even explain to you how to calculate that, okay? So, say I have $1,000 and that's my balance over the year in my high yield interest account for my savings. Say I get 4% APY. So to calculate how much money I would get, I would first take my $1,000, multiply it by 0.04, and then multiply that by 5. That would get me $200. So my $1,000 will make $200 at the end of the year. Do you see what I'm talking about? The average bank pays about 0.45, not 4%, 0.45, 0.5%. Don't waste your money. Make your money work for you. Okay? Let's go a little further while we're at it. What is a money market account, or an MMA? No, not a mixed martial arts account. A money market account. A money market account is a type of savings account that often offers higher interest rates in return for a higher minimum deposit, usually $5,000 or more. I don't got that right now. I don't know if you do, but I don't, because I'm just a teacher. So I'm going to start a little smaller, okay, because that feels more comfortable for me and my budget. Remember, the average American household has less than $500 for an emergency, beloved. We got to work on that. We need to get our emergency fund money, okay? Emergencies, flat tires, right? Repairs, doctor's visit, emergencies, okay? You got to get that money first. Then we can work on the other stuff. Some things you may be looking for in a high yield savings account are low or no fees. Remember, we don't want to pay fees for our money. So usually that would be an online account, and they can afford to give you a highest interest rate because they don't have the brick or mortar problem. They don't have a building with employees they got to pay. So they can offer you more because it's online. And it's convenient because they usually allow you to manage it on your app. They have an app. So, for instance, I'm not endorsing it. They didn't pay me. Okay, I'm going to say that first. For instance, I have a Capital One credit card and I have the app. So that's very convenient for me. So now I have a Capital One 360 high yield savings account and their checking account. My savings account right now is offering 4.25%. Let me state this. The high yield savings account, the interest is variable. So it doesn't stay at that rate. It can go up and down, but not as low as the regular bank offers. Okay, so it usually stays higher, much higher. A couple of things before I forget. We want to make sure that it has flexible deposits and withdrawals, beloved, because we need to get our money when we need to get our money, right? Also, we need to make sure that it's FDIC insured. And how much is it insured for? For instance, my account is insured for $250,000. So I need to get my money back. Okay, so I'll get my coins back if something happens. $250,000. I don't think I'll ever get $250,000, but just in case. Thank you for watching. Thank you for listening. Please, if you heard something helpful to you, do consider liking, commenting, and subscribing. And as always, God bless you and God bless you.